ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. Good afternoon, ladies and gentlemen. I'm very happy to present to you the highlights of the financial performance for fiscal 2016. As you know, this is the first full year of the execution of company's new strategy, and I'm very happy to report some early results of our strategy execution. Now let me check whether this is working or not. Is the safe harbor? Thank God, it's working. So during the financial year, we had a healthy revenue growth. Revenues grew by 17.1% in rupee terms and 9.1% in USD terms and 13.3% in constant currency terms. Our net profit grew by 9.4% in rupee terms and 1.9% in US dollar terms. However, you would notice that the net profit margin was 21.6% as compared to 23.1%, a decline of 1.5%. Now, coming to volume growth, you would see that we had a very healthy and broad-based volume growth of 14.5%. However, the price realization declined by 4.7% in reported currency and 1.1% in constant currency. As we have said in the past, price decline needs to be offset through internal operational efficiency improvements and productivity improvements through automation. I'm going to talk about it shortly in my presentation. Vishal talked about this, operating cash flow. We had a very healthy operating cash flow. It grew by 13.9% this year. And I would also like to mention the second number on the right side, which is as a percentage of net profit, operating cash flow increased to 90.7% as compared to 87.2% in the previous year. Our liquid assets increased by 5.8% to 34,468 crores. And these liquid assets includes cash and cash equivalents, available for sale financial assets, and government bonds. As you can see, both gross profit and operating profit grew during the year by 14.2% and 12.9% in rupee terms, respectively. However, you would notice that the gross margin and operating margin percentage declined by 0.9% each. Operating margin decline of 0.9% was primarily an account of reduction in revenue productivity, increase in on-site mix, and increase in subcontractor costs. As I mentioned earlier, we are focusing on improvement in key operational efficiency parameters, which are indicated in this slide. These are the levers that really have, in the short term, towards healthy operating margin. While some of these parameters have improved during the year, some need further improvement, and we are working towards it. For example, while employee cost as percentage of revenue has come down by 0.7%, we saw an increase in the subcontractor cost as percentage of revenue. While some of the subcontractor cost is inevitable to address the business needs, we are further strengthening our talent planning to optimize the need for subcontractors. Utilization excluding trainees is almost flat, and this certainly requires further improvement. On-site mix percentage increased during the year by 0.6%, and we are working towards gradual reduction. You would recall that these are precisely the key operating and cost optimization parameters which we focused 2 years ago under Mr. Murthy's leadership. Coming to dividend, our dividend payout has been very healthy. You would recall that the company over the last 3 years has revised the dividend payout policy twice, resulting in the dividend payout ratio increasing from 30% to 40%, and then again from 40% to 50% of consolidated net profits of the group. For fiscal 16, dividend payout was 49.7% of the consolidated net profit. Our EPS has increased by 9.4% in rupee terms and 1.9% in US dollar terms. We deployed various employee engagement initiatives during the year, as both Vishal and Praveen talked about, which resulted in significant decrease in attrition. Attrition reduced to 13.6% in the current year from 18.9% last year. Coming to liquidity and return, we have been able to achieve a good balance between returns and liquidity. As you would notice, return on capital employed, ROCE, is 32.2%. The capital allocation policy is evaluated from time to time after considering requirements towards capital expenditure for future business growth, technology investments required to be made for new services like products and platforms, requirements towards mergers and acquisitions, and most importantly, readiness for any rapid investment required for any unforeseen business needs. The liquid assets as percentage of total balance sheet is expected to reduce over the period of time. As we saw in the current year, it dropped from 49.1% last year to 45.7% this year. Moving on to the summary financial performance on the P&L side in rupee terms. I've talked earlier about revenues and margins. I would like to draw your attention to the other income, which has decreased in fiscal 16 to 3,125 crores. This is primarily due to declining interest rates in India. Effective tax rate has come down by 0.6% to 28% this year. This is primarily on account of net tax reversals of rupees 309 crores due to completion of audits in certain jurisdictions, and we did not require these provisions anymore. We continue to have a very solid, strong, and zero debt balance sheet. Cash and cash equivalents were healthy at rupees 32,772 crores, and they form 43.5% of total assets. And the total assets, as you would see, increased by 13.5%. Coming to liabilities, there are no significant change in the liability structure. As you would notice, the share capital has doubled on account of the issue of 1:1 bonus shares that were issued in June 2015. We had a healthy growth in retained earnings. Shareholders' equity, which is your money, accounts for 82% of the total balance sheet size. Account receivables days were a constant at 66 days during this year. Coming to our business segments, all the vertical segments had a healthy growth during the year. As you would notice, financial services continues to be our largest industry segment, followed by energy, utilities, communication, and services. Coming to the geographical segments, North America continues to be the largest segment with 62.7% of our revenues. And there has been a slight drop in the share of revenues from Europe. This is primarily an account of the currency depreciation in euro and British pound. You would know that during the last year, there was extreme currency volatility. Rupee depreciated by 7.4%, and all the other major currencies where we derive revenue from, whether it is British pound or euro, also depreciated. Our policy is to hedge net foreign currency assets of 2 quarters on a rolling basis up to a maturity of 1 year. This policy has helped us to mitigate impact of currency volatility on the P&L over the years, and we plan to continue our very proactive but at the same time practical hedging policy. So with this, I conclude my presentation on financial performance. I again thank you for all the support and encouragement during the year, and I look forward to your continued support in the future. Thank you.